Hey guys, it's Arsh Ellahi, and in this video today we're going to be talking about some of the mistakes that you can make when you're investing in property alone and some of the things that you should be avoiding. Before we do that, I need a small favor from you. If you wouldn't mind pressing the subscribe button and hitting the notification bell, every time I release a new video, you get to know about it. So let's get straight into it. Now, this video was born from a conversation that I had with a property investor who booked a 1 hour coaching call with me. So I do 1 hour coaching calls where someone will say, Arsh, I've just got a specific problem and I need to kind of address or I need you to look over the deal. And this is where I will then sit down with your specific issue and then go through the pros and cons, what you're facing, where you are now, what the challenges that you're coming across, more importantly, what we can do to overcome them. And the reason why I say that is because sometimes property is a lonely business, especially if you're investing in by yourself. So you may look at a deal, you think, is this the right deal? Is this not the right deal? Are there better deals out there? Or you're running the numbers, you're not 100% sure whether the numbers make sense or whether they stack up. And believe it or not, this is quite common. So anyway, going back to the coaching call that I had with this young lady, and she says, Arsh, I'm looking to buy this property and it's in a specific location. We're not going to name locations or names for the video. That's not fair. But hopefully you take a lot away from the lessons that were learned. So the purchase of the property was £400,000, and the vision or the aim was that she was going to develop the property. So it was one large bungalow that sat on quite a large plot. And the intention was to either demolish the bungalow or redevelop the bungalow within the existing footprint to build 3 2-bedroom terraced houses, or go up on the bungalow and extend it into apartments. So there were a couple of options there. And the lady very kindly, she goes, Arsh, I've seen this, I've got my offer accepted, we're going through the process, but I just want to be 100% certain that the numbers stack up. And I'm perfectly fine with going over numbers. So I said, I need all the information. So she sent across all the information, and on this call, I started to look at what all the options were. So when you're investing in property, the one thing I should always say is that you should always have A, B, and C. Plan A, Plan B, Plan C. So if Plan A doesn't go according to plan, have you got a backup plan? And if the 1 and 2 plans don't go according to plan, is there a third backup plan? And the reason why I say this is because Plan A won't always go according to plan. And we can relate this into a number of different ways. For this session, we're going to be talking about this development. But from your point of view, you could be, if you're buying a property and you've got JV finance in place, have you got Plan B just in case that person falls out throughout the process? And the reason why I say that, that's also very common as well. So anyway, going back to my mini story. So lady, we looked at the development and I started to look and I said, well, what research have you done on this property? What history background have you done on the property? She goes, I've not really looked into the history. I said, really? You make your money, or you'll determine this property is going to make any money from the research that you do from the outset, not when you bought it. Because if you've bought it and you start doing your research and you find that you can't do what you wanted to do with it, you're then stuck with a very expensive mistake. And I'm very clear on that. I'd rather you delay the purchase process by a week or 2 weeks and do your due diligence before going to complete the transaction, then purchase it and find that your desired outcome is no longer an option. In this scenario, I looked at the planning background and I didn't see anything adverse on the planning background. So I looked at that, I looked at what was in the location, I looked at what was for sale, I looked at all the other demographics. There's lots of things that I look for when I'm trying to appraise a property. And then I also looked at the rough indication of what the build cost was going to be. So there were some initial plans of what the development would look like. So there had been some research done, but not enough, in my opinion, for this to be considered as a viable development. And so when we looked at it, the purchase price was $400,000. Now, to convert the house into 3 dwellings, it was going to cost approximately $100,000 per dwelling. So that was going to take the development up to another 300,000. So in total, the gross development value was 700,000. Now, her intention was to use leverage, so in terms of funds, so mortgage funds as well as development finance, and development finance is a very good way of funding developments, but they will only lend providing that the product or the development is viable. So when I started looking through the figures as to what they would lend, in actual fact, based on my figures and not the investors' figures, in actual fact, she would end up putting in a lot more cash than she anticipated. And I asked the question, do you have the funds to do that? And she said she could get hold of the funds. And I thought, okay, that is an option. Anyway, going back to the point. So the research that we did showed that after building these out, so the cost of it would have been circa around between 750 and 800,000 pounds, taken into consideration stamp duty, taken into consideration finance costs, legal costs, arrangement costs, contingency costs, and everything. So we're going to be roughly around between 750 and 800. Again, these were rough indication figures for me because this was the first time that I was appraising it. I would want to spend more time and homing in on what the other costs would be. So let's just say for this video it was 750. But from my research, it showed that in actual fact, these houses, a best case scenario, were going to be worth around 250 each, which means that the gross development value was going to be around 750. So if it's cost you 750 to build and they're only worth 750, how is that an attractive proposition? You could say, well, in actual fact, in that location, that developments are scarce, it's hard to find developments, and I get all that, and I completely get all that. And I said, well, what's your plan B? She goes, I'll rent it out. And I thought, okay, well, if you're intending on renting it out because you can't sell it because you've then got too much money in the project to sell, why don't you just go off and buy a normal rental? Why do you need to go through this whole process and type so much cash? Because remember, a lot of it is going to have to come in because the development company will want to see 100% of the development. Well, okay, let me break this down. So the way that development finance works is that they will lend you a certain percentage of the purchase. So let's just say in this scenario, the purchase is 400,000. They will lend approximately 70% of that, which means that you're still going to have to put in for 120,000. Plus, they're going to lend you 100% of the development. However, what they will want to look at is how much the whole gross development is, and they still will want to be below 85% of the gross development value. So they still want there to be a 15% margin. Now, if you work on the basis that if it's worth 750, they will want their lending on that whole project to be 15 to 20%. And I'm being very, optimistic there. Some of them want 20 to 25%. And when we looked at that and said, well, in actual fact, you're going to have to pump in a lot more cash because once they've done their appraisal, initially they've said they'll lend you 100%, but that will start to chip away. How many times have you had a property that you tried to buy, and let's just call it a normal house, and the surveyor's been and they've downvalued it? As a result of the downvaluation, the mortgage offer or the amount of money that the mortgage company was going to lend you has also decreased. And this is exactly the same for development finance. So when we looked at it and we said, well, in actual fact, this is how much money you're going to end up putting in. And because you are going to be pretty much 100%, when I say 100% of the market value, it's costing you, the market value is going to be 750 and it's costing you 750 to build. It's not a viable transaction in any way, shape or form. I tried to look for other options, so we looked at, houses. Could we get potentially more houses on? Could we get more units? Could we increase the gross development value? And every way we looked at it, it was quite tight. Even though it's a development opportunity, there's only so much scope that the opportunity has. And also you've got to take into consideration how much or how open are the planning or the local authority going to be to creative schemes. So we had all that to take into consideration, and there was also risk that there was no planning attached to the site and the owners were not happy to give certain amount of time for the purchaser to go off and get planning. Again, this was a risk, and I asked the investor, what happens if you don't get planning? She goes, I'll rent it out as a house. I said, but you're buying the house at full market value. You can buy better buys and get better returns. So it's also understanding what's going on in the marketplace and how far can your funds work. So it was really interesting. And at the end of the hour call, and again, this was a paid for hour coaching session by the investor. And at the end of the coaching session, we come to the conclusion that in actual fact, that 750,000 is spent better elsewhere, and we started to look for other opportunities. And believe it or not, we came up with one, and that was one that she was going to go and appraise and come back with. Hopefully she learned a little bit more about, you know, homing in on the numbers, looking at the strategies, looking at the alternatives, and seeing how that can benefit her and how it can also benefit the project. So there we have it, guys. Just short video. I would say that if you guys have got a project and you need someone to appraise it, and it's good to appraise it from the outset before you're buying it, before you start committing large amounts of funds to it, then please feel free to get in touch. It is a paid session. I don't mind saying that, but you'd have to get in contact with me. Then we'd have to have a chat. We'd have to see if we're the right fit and whether our timetables match. And then let's go from there. So guys, as always, hopefully you've enjoyed that session. It's a bit shorter than normal, but I think we've got all the content that you needed, and more importantly, you've taken a lot of information away from that. If you want more free content, go and check out my podcast. We release a new podcast every Tuesday at 6 a.m. It's called The Property Rebel, and you can find it on all the platforms. So whether it be Spotify, Stitcher, Google Podcasts, Apple Podcasts, it's on there. Please feel free to leave me a review when you get there. As well as that, connect with me on social media. Find me on Facebook, LinkedIn, Instagram, Twitter, and Clubhouse. I'm quite active on social media, and if you want to get in contact or you want to ask a question, please feel free to do so. They're all under the handle of Arsh Ellahi. Finally, if you haven't already done so, have you downloaded the Property Investor app? It's the UK's first platform which showcases all kinds of deals all over the UK. Whether you're looking for BNV deals, rent-to-rent deals, service accommodation deals, we've got them all there. Two ways to get involved. You can either go to our website, which is propertyinvestorapp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it. It takes 2 minutes to do that, and you'll see them all in the palm of your hand. And the best thing is, it's absolutely free. So on that note, guys, as always, I wish you all to be all safe, well, and happy. And I look forward to speaking to you all very soon. Thank you. Bye-bye.